Hi guys, welcome back to High Yield Intraday Trading. I hope everybody is doing good. So today the topic that we are going to discuss is something called as a dead cat bounce. And as always, there are many myths surrounding this topic. So like any other topic that is a part of the trading world, we get to hear many different versions of the same thing, right? Some are true, some are partially true, some are absolutely wrong, and some are partially wrong, right? Similarly, dead cat bounce also has many versions tagged to it. So in this video, I will let you know what exactly is the dead cat bounce with an example, of course, so that you all can be clear as to what exactly is a dead cat bounce. Okay, so the first question comes up: what is a dead cat bounce? So basically, a dead cat bounce is a price pattern, and it is a short-lived recovery that is seen when a particular stock is in a major downtrend and suddenly we see the price temporarily rising up. Okay, so let me repeat it again. So let's say we have a stock and it is in a major downtrend. So what will happen to the price of the stock? It will keep falling. One fine day you saw that the stock is retracing back. The price of the stock is going up. Now that increase in price of the stock can take place for 1 day, for 2 days, for 4 days, for 6 days, for 9 days, whatever it is. The baseline is, amongst the major downtrend, the stock price has started moving up. That movement of the stock price in the upward direction is called as the dead cat bounce. Okay, because that upward movement of the stock will not sustain itself. Eventually it will again start falling. That is the reason why I mentioned it is a temporary rise in the price. Okay, so hope I'm clear now. Now the next question comes in: what causes a dead cat bounce? Well, there are many reasons to it. Some of them would be like, if the investors think that the price of a particular stock has bottomed out, the price of the particular stock has come to the maximum lows, okay, then what they will do is they will start buying the stock. Now this will make the price to go up. And the thing to note here is, we are not talking about the retail traders or the retail investors. We are talking about the biggies of the stock market. We are talking about the big guys of the stock market. Okay, the guys who have the potential to move the market. Okay, so if they start buying, obviously the result is the stock price will start moving up for some time. Okay, but what's happening in real? In real, the stock is still in the downtrend and eventually it will fall further post the dead cat bounce is done. Okay, now the next question comes up as to how do we know whether it is a valid dead cat bounce or not? Okay, well, there are technicals to know that, but it's not a small topic. Okay, so it is out of scope of this particular video, but to do my best, what I will do is, as of now, I will show you guys an example seeing which you can make out in the other stocks, or even to the matter of fact in Nifty, whether the dead cat bounce is valid or not. Okay, so let me take you to the chart. Okay, I was searching for a dead cat bounce and I found it out in Star. Okay, Star is one of the stocks which gives some good movement. Okay, in intraday also you can make some good money if Star gives starts give some movement, then the movements are really good. Okay, so Star is one of the stock wherein I found the dead cat bounce. Okay, now the first thing first. So for a dead cat bounce to be valid, the stock has to be in a major downtrend. Okay, so how do we say that Star was in a major downtrend? Maybe from here to here, or maybe from here to here. How do we say that? We say that by seeing the lower lows and the lower highs. Okay, everybody knows what is a lower low and a lower high, right? If anybody doesn't know, let me quickly recap it. Okay, so this is a high, right? This is also a high, but this high is lower than this high. Similarly, this high is lower than this high, and this high is lower than this high. If you come here, this is a high, but this high is lower than this high, and this high is lower than this high. So what do we say in trading terms? We say that Star is making lower highs. Okay, next is lower lows. So this is a low, right? And this is again a low which is lower than this low. this low is lower than this low. Similarly, this is a low, but this low is lower than this low, and this low is lower than this low. So what do we say in trading terms? We say that star is making lower lows. Okay, so we come to know about the trend of a particular stock if the stock is making lower lows and if the stock is making lower highs. Okay, hope that is clear. So in this case, star was in a major downtrend. Okay, so it was coming down, and here one fine day we saw the script price to be going up. So one day it went up, second day it went up, third day also it went up, fourth day it was like for the entire day it was moving up. Okay, so this phase of the stock of going up is called as the dead cat bounce, because it was not able to sustain the up move. It again started falling. Okay, so how do we say that it continued with the down move? Again, it started forming lower lows and lower highs, right? So it was a high, it was a lower high, it was a lower high, it was a high, it was a lower high, it was a lower high, this was a lower high, this was a lower high, and lower lows as well. So this was a low, this was a lower low. Okay, similarly this was a low, this was a lower low, this was a lower low, and this was a lower low. Okay, so star again started making lower lows and lower highs. So that is confirmed that star has again started its down move, and this dead cat bounce was not able to sustain itself. Okay, now some people say, as I said, there are different versions to it. Okay, so some people say that only the first candle which started the up move is called as the dead cat bounce. Okay, but that is quite not true according to me. It's because just with one candle we cannot say that star tried retracing. We need to have a couple of candles, right? So according to me, this whole phase, okay, all the four candles make up the dead cat bounce. Okay, I hope I have made myself clear. Okay, now another thing, some people also believe that if you get a candle like this, okay, you get a candle like this, okay, so they say that if you get a candle like this with a big wick, okay, then it is called as a dead cat bounce. Now is that true? It might be true, okay, because it did try to push the stock in the upward direction, but sellers pushed it down. Okay, and after this is a one-day candle, so it might be the case that on the next day it moved up, next day it again moved up, next day it again moved up, but it was not able to sustain the move. Okay, so what happened is it started moving down, down, down. It breached the low like this and started the movement again. Okay, so this scenario also is a valid dead cat bounce. Not the entire scenario, I mean this phase, okay, is also a dead cat bounce. Okay, so there are different versions, there are different kind of understanding for the same thing, but the important part is you need to know what exactly a thing means. Okay, so a dead cat bounce, for a dead cat bounce to be valid, the stock has to be in a strong or major downtrend, and amongst the major downtrend you should see the stock retracing back wherein the price is going up, and that upward movement of the price should not be sustained. Okay, it will stop at some point, as it stopped here. It should stop at some point, and again the downward movement should start. Okay, now the next thing which I want to cover here is it that we get the dead cat bounces only in the one-day time frame? This is the one-day time frame chart, okay, as you can see here, right? So is it only that we get the dead cat bounces in the one-day time frame? The answer is no. You also get you also get dead cat bounces in the lower time frame. If I give you an example, I remember before a year or so, SBIN, okay, State Bank of India, it was continuously giving dead cat bounces every week, almost every week it was giving a dead cat bounce. Okay, and in intraday, as all of you know, I follow a 5 minutes time frame. Okay, so by applying the technicals, okay, if you are able to know that the dead cat bounce which SBIN has given in a 5 minutes time frame is a valid dead cat bounce, then you can easily go short and mint some good money. Okay, because if the dead cat bounce is a valid dead cat bounce, then the fall that comes after that is huge. So you can take a short position and you can earn some good money. Okay, so that's it, guys. This is what I wanted to share with you guys. Okay, I hope this adds on to your cognizance. Okay, try finding for some dead cat bounces in the scripts or maybe in Nifty. Okay, just for your practice, so that you get comfortable with the pattern. Okay, so yep, that's it. And as always, would request you all to like and subscribe to my YouTube channel, and also please join in the Telegram channel, the link to which you will find in the description section. Okay, and I will see you all later. You all have a very good night and happy trading. Bye bye.